What's up, guys? Let me tell you about this trade I took recently. I want to break it all down for you. The approach I used, the specific patterns I identified, how I actually entered the market, and then how I managed the trade to maximize my profits after getting in. I hope that by the end of this video, you'll know the full playbook I ran, so you can take this strategy and put it, if you want, into action yourself. So my approach to trading is basically quite simple. Instead of forcing trades based on the market's whims, I let the market come to me at areas I have pre-identified as potential setups fitting my strategy. Once price prints inside any of those key zones I have interest in, what I do next is I have a checklist I go through to see if conditions are right or optimal for making an entry or staying flat. Why this approach? Well, when the market starts testing an important level, one of the biggest factors I assess is what I call the RMPDP, which stands for Reassessment of the Market's Price Delivery Process. Essentially, this price analysis determines if the underlying trend appears positioned for a potential reversal or trend continuation. And now you can never really know for sure what the market is going to do next. That's just how it is. But this approach I use, where I am primarily looking for areas with strong confluence, can give you some legit context if you read it right. I think that this approach also helps clue you in on when a potential shift in the trend direction could be brewing. With that context, you can then try to position yourself accordingly to catch those moves. That said, though, the very first thing on my entry checklist is always nailing down that trading range. You gotta start by marking out those obvious swing highs and swing lows on your chart, and that's what defines obviously support and resistance, or the overall range you are working with. And the reason for that is simple. Without that solid range identified up front, the whole analysis kind of falls apart, meaning that these swing points over here serve as the key guides for where price could potentially reverse or keep traveling. Also, these levels don't just tell you the range and the direction of the trend. They also help confirm different price patterns like head and shoulders, double tops, double bottoms, all those classic reversal and continuation patterns. And again, if you don't have that range clearly mapped out first, then all the other signals basically get muddy and ambiguous. So step one is always taking the time to identify the range, which is going to be basically the bedrock that the rest of your analysis builds off of. And once you have got that nailed, then you can start digging into the other steps with full context. Now, the next on my entry checklist is trend direction, which is basically figuring out whether you are dealing with a trend reversal or trend continuation. Looking at my chart here, the thing that initially caught my eye was this obvious ascending channel forming, but then just like that, as you can see from the chart, the price action flips into a descending channel after that nice ascending one. So now we are caught right in the middle between two opposing channels pulling in different directions. The question is, which way do you lean? Well, the simplest way I like to kind of get a feel for the trend in this scenario is by analyzing the magnitude of these two channels. And just by eyeballing it, you can clearly see the descending channel's trajectory is way shorter than how strong that initial ascending channel was riding up. To me, that's a signal that this downward move here is starting to lose steam and running out of gas compared to the previous uptrend. So instead of focusing on this breakdown, I'm looking towards an upside bounce since that initial bullish move still seems to have juice left in the tank. What's more, that bounce idea gets more traction by how price respects and bounces cleanly off this strong support level down here. Then we have this choppy sideways and downwards kind of a mess happening right in this area for like a good hour or so. And this is clearly one of those barcoding type moves ending with a somewhat pronounced bearish tone. And another thing about this massive price action here, besides the obvious support level, I'm just not seeing any other clear confluence areas that would give me a higher confidence on where this market wants to go next. Meaning the whole move is mixed and elusive as hell without those additional confluence zones to lean on. Basically, we are at the stage now where the market is reassessing and retesting its price delivery process, like I mentioned earlier. It's just stuck, it seems to me, in neutral, trying to figure out its next move. So when I see this type of stalling action, it gives me a pretty good idea of what I should be doing next, which is basically nothing. I'll just chill and wait for the market to get drawn towards one side of the range I identified. Once it starts respecting and vibing with, as it later does, vibing with those key swing point areas again, that's when I can start looking for direction and high probability trade setups with obviously actionable confluence. So as the price rips through the top of the range here, I know the buyers are taking control of this move in the short term. So judging by the RMPDP's intensity of the spike, this breakdown move that led to a range breakout was, in scalping terms, a short trap. Now, when the market breaks out like that, the next thing I do is zoom out to a higher time frame to look for a potential reversal trigger to form up. It's all about perspective at this stage. We first got our range drawn in the lower time frame and saw price blast through resistance and trend north. But now we need to get a wider lens and see how this move is shaping up. Obviously against some bigger levels. We have to ask ourselves: is it just a fake breakout that's going to get smashed back down, or does it actually have some real momentum behind it? The point is, guys, a higher time frame view helps with more context around the bigger picture. You also have to look, as I said, for specific reversal or continuation patterns and triggers to form that could signal the market is showing some real strength behind this breakout move, or just getting exhausted and topping out. Once I see those clues, either bullish or bearish, that's my signal to plan the next high probability entry point. So what I do now is wait for the market to show me the way, and sure enough, we start grinding up here and testing this resistance level. And what do you know? The market forms a textbook double top, smack dab on resistance, a classic, obviously, bearish reversal pattern. For me, though, the real confirmation to actually pull the trigger came when price just sliced straight through the 9 EMA right over here. But check this out: after the price pulled back into the range, we get a retracement that results in this little right shoulder forming. What that is implying is that the double top we saw on the 1 hour chart was followed up by a full head and shoulders pattern playing out on the 5-minute time frame before the plunge. It's like the market has its own twisted way of coordinating and lining up these patterns across multiple time frames, almost as if it's following some sort of funky choreography. Kind of mind bending when you really stop and think about it. As for my profit target, I just had my order, as you can see, preset to cover at the bottom of the range. And if you're really trying to get the full scoop on more of my trading strategies, make sure you check out this video right here. I break it all down for you, the whole 9 yards. Alright gang, thanks for watching, and as always, hope to catch you all in the next one.